Wonderful. Good afternoon, one and all. It's my privilege to introduce you to amazing people with us today. Mr. Rajan Anandan, the Managing Director of Sequoia and Sequoia Capital India LLP. He takes care of the search program. We have with us Mr. Nagarajan, Commissioner of Higher Education. And this is a special webinar by iHubGujarat. Gujarat. And today it will be going to be a fireside chat with one person who has been involved in Indian startup ecosystem journey since the beginning. He has been a corporate veteran and a very, very passionate angel investor. So Rajan, welcome you to this special session today. You have over 5,000 people listening to you directly on Facebook Live, on iHub, and similar platforms. Welcome you, sir. I would like to introduce Rajan ji to the audience. Rajan is a part of the leadership team at Sequoia Capital. He is focusing on developing Surge, which is a very flagship program at Sequoia, into the world's top scale-up program for startups by acting as an investment advisor and mentor to the program's founders. Surge aims to engineer rapid early progress for startups by enabling disproportionate access to capital, talent, network, and decades of company building knowledge. Rajan's deep understanding of technology, of operating exercise, and a track record of growing tech business across the region will help the Surge founders to build the business more. Prior to Sequoia, as the VP of Google India and Southeast Asia, Rajan played a key role in expanding the regional internet ecosystem, accelerating Google's innovation and growth in the region. He is also a prolific angel investor who has backed a large startup at very early stages. He also led Microsoft and Dell in India, worked for Michael Dell, founder Dell, and earlier after that McKinsey to this special session or the fireside chat with you to understand what next for Indian startups to this special session. Welcome, sir. I would like to request Nagarajan to share his initial comments for the session.
Yeah, thank you, Hiranmay. Thanks for putting up this great session with Mr. Rajan here. He is one of the lead change makers and thought leader in the startup and innovation ecosystem. We have all learned a lot of ideas from him through the media whenever he gives an interview and shares a lot of. Can you hear me?
Yes, sir.
Yeah. So it is a great privilege. It's going to be a great source of inspiration for our early stage entrepreneurs who are in the idea to market space, and especially all the 3,500 ideas that we have funded so far. I'm also happy that today our mentors and change makers who are the college teachers who are guiding our startups will be hearing him live on our show. So great warm welcome to Mr. Rajan Anandan here. So just to put in perspective what iHub is doing is like we are catalyzing the Gujarat startup ecosystem by catching the students young and making them start up on their ideas, right, just when they enter the college. So from 17 to 22, the student is able to work on his idea and put it into a startup and then get access to institutional support, mentors, and also then have a graded evolution to a risk capital scenario where he can be angel ready or seed investment ready. So we are focusing on the pre-incubation part. So the idea stage to the product stage. That is because we have to increase the pipeline of startups so that we have more quality startups that are coming up and catching the entrepreneurs young and providing them the opportunity to work on their ideas and have a sandbox where they can afford to fail and not get hit very strongly when they are in the actual world. And fortunately, because of our country's talent and the energy of the youth, many of these startups have scaled up into 10 lakh, 50 lakh, and even few crores of rupees of revenues. So we have some portable startups which act as an inspiration. When a student is seeing his senior starting up, basically we are trying to bring that alumni and starting up culture of which was typically in IIM, IITs, or say even Harvard and Stanford to each and every college within this country, to very tribal districts and to very interior areas, and enable an institutionalized ecosystem across Gujarat, and probably it could be a model for the whole country because we need a diversification. Another thing that makes iHub stand apart this is supported by Education Department, Government of Gujarat. So it has a lot of state banking. The Student Startup and Innovation Policy provides direct funding to these ideas, and we have a very organized system of supporting these startups, and iHub is coordinating all these things. So typically that way, iHub is more than just an incubator. It is an aggregator of the ecosystem and provides a sort of moral leadership in catalyzing everything in this. So in that sense, we are forming various partnerships led by the team led by Mr. Hiranmay. That is how we are today having you here in seeding more ideas in each and every village and institution of this state and probably across Gujarat, because we have audience participating from across India. So moving on to, I think we shall start picking your brain, Rajan.
Sounds good. Sounds good. Thank you for having me.
Yeah. So let me start with something that you are leading right now, which is the Surge initiative. So can you tell us about this Surge initiative and how it can impact the Indian startup ecosystem?
Yeah. So Surge is Sequoia's early stage program. It's focused on seed stage companies in India and Southeast Asia. So seed stage is, it's every companies that go from pre-launch up through companies that have launched and that have some level of traction. We launched this in March of 2019, and the intent is to really invest in and partner with the absolute best founders in our region, right, India and Southeast Asia, to help them sort of scale and build their companies and make all the sort of the important decisions that you need to make, sort of, let's call them design choices of a company, very early in the company's journey, right? So the way it works is we invest $1 to $2 million per company, and we do this in cohorts. So we have 2 cohorts a year, 15 to 20 companies per cohort, and we work with the companies for, you get the capital upfront before you start. You get $1 to $2 million, depending on the company, and we work with the companies for a period of 14 weeks. It used to be an offline program, a global offline program, where we spent a week in Singapore, then a week in Bangalore, a week in China, a week in the US, and back in Singapore. But now, obviously, in COVID, it's an entire online program. We have 1 day a week we actually spend together, and every week we focus on a different aspect of company building, and we go very, very deep. So that's sort of the second part of Surge. The third part of Surge is we provide a lot of hands-on support that early stage founders need, right? It could be, how to hire your first set of engineers, the first set of customers, or it could be to partners, etc. So whatever the set of most important things that an early stage company needs, we help them with that. So third is hands-on support. And the fourth one really is we have access to a very exciting and broad mentor network that they can leverage to talk to the startup in terms of what kind of mentors that they would like to have. Some of them would like to have board members. Some of them would like to have sort of, mentors who can help them on marketing or sales or engineering or product. And then the last thing we do is we have a very strong community, right? So we currently just finished up our third cohort of companies. So we have about 52 companies. We have over 100 founders, and now we are actually selecting companies for our next cohort, which starts in November. So that's the fourth part. And then the last part is whenever the companies need to raise their next round of financing, we have something called Upsurge, where we have 35 to 40 of the leading Series A investors in India, Southeast Asia, Asia region, US, who actually meet with companies one-on-one. So every startup will meet with 10 or 15 investors. So it's not a demo day. It's more of a one-on-one meetings over a period of 2 days, where that helps sort of investors figure out very quickly companies that they want to invest in, and it helps startups also accelerate their fundraising process. So that really is what Surge is. So think of it as capital, together with what you might call, since Mr. Nagarajan, you're in the university system, you might call it a founders academy, where there's a lot of very, very deep content and knowledge, a lot of hands-on support, follow-on capital, mentor network, and a community. So all of that put together is what's called Surge. We, as I said, launched in March of 2019. Our first cohort was about 70 companies. 12 of them have raised Series A. Our second cohort was 20 companies. Actually, we have invested over $100 million into Surge companies ourselves. And those companies that have raised follow-on financing have already raised over $250 million of capital from other investors after they got out of Surge. So far, it's been encouraging, but as all of you know, with startups, it takes 5, 10, 15 years to actually build an enduring company. but we are very humbled with the early results we've had so far with search.
Yeah, I think that's wonderful because I see a good synergy in our mission. We are working on pre-seed stage and you are working on the seed stage. And another great thing that I can see from your model is that you're taking a lot of unnecessary load off the shoulders of the founders and making them actually focus on their mission. I think Surge is really helping the startups to surge forward. And so with this thing, I think it's wonderful. And moving to the next question, with Facebook and Google investing in Indian firms like the Geo platform, where is India's internet economy headed? And what is the opportunity for startups in the new emerging digital space?
Look, I think the $20 billion investment into Geo, right, really, which has happened in the middle of COVID, which is unprecedented, right? Any one company raised $20 billion of private financing, and that too, with $6 billion from Facebook, $4.5 billion from Google, is unprecedented. And I think it's a great testament for the potential of the Indian internet ecosystem and the Indian economy, right? It's actually a very encouraging and very exciting time in the Indian internet. I mean, the simple way you should think about it is India today has over 500 million internet users. Each of these users consumes about 16 gigabytes per user per month of data. And by 2025, India will be a billion user internet ecosystem, right? And obviously the data consumption is most likely to be even higher than what it is today. So, and by 2025 or maybe 2026, between 2025 and 2027, India will essentially be neck on neck with China in terms of number of internet users. And already India by far has the largest amount of data consumption by mobile users anywhere else in the world, right? In fact, if you look at developed countries, the mobile data consumption per user per month is at about 7 gigabytes. We're already at 16, so we're more than 2x the mobile data consumption. So you can imagine what's going to happen in an internet economy that has a billion connected users, which is only 5, 6, 7 years away from where we are today. And what that's going to really lead to is, a further acceleration of what we have already seen, right? What is remarkable and what very few people think about is how far the Indian internet has come over the last decade. If you look at a lot of the student entrepreneurs who are working with all of you, I mean, most of them were, probably, toddlers, or some of them were, 5 or 6 or 7 years old in 2010. But if you go back to 2010, which was 10 years ago, India had only a few thousand startups. India had 0 unicorns. The unicorn is $1 billion tech company. And India had less than $1 billion of venture capital funding, right? But if you fast forward to 2019, India had over 40,000 startups. We had 30 unicorns, $30 billion companies, so 0 to 30. And we had over $14.5 billion of venture capital funding in 2019. So we've come a very long way over the last decade. But in many ways, what we've seen so far is the trailer, and the movie is going to start. So actually, if you're a student entrepreneur building your company, I think this is a very exciting time to be building the company, because in many ways, 10 years from now, it's going to look so different to what it is today, right? Much like we could not imagine in 2010, we could have never imagined. I didn't imagine what Indian internet would look like in 2020. Sitting here in 2020, there is no way we could imagine what 2030 might look like. All I can say is it's going to be significantly bigger, 5 times, 10 times, 50 times bigger than where the internet is today in terms of activity, right? Consumption, consumer spend, startup activity, and so on and so forth. So look, it's a very exciting time, and I think just to come back to the Geo investment, I think it's just a fantastic testimony of the potential of the Indian internet ecosystem.
Yeah, I think Geo represents the opportunity that India represents for everyone in the innovation and startup space. And I think that's a very exciting future to look forward, because no one is able to actually put a prediction on that in terms of the scale of and also of its impact and also of its spread across India. And so recently, Sequoia Capital launched this $1.3 billion fund to invest in India and Southeast Asia, despite this pandemic where 90% of these startups are facing worse days. And what makes your company invest in India and Southeast Asia? What are the opportunities that makes you bullish on India?
No, look, as I said, I just went through it, right? Which is, as India, and I didn't talk about Southeast Asia, right? Southeast Asia has gone through a very similar journey. But we've gone in India from 10 million connected smartphone users to 500 million connected smartphone users. We're going to double that number to 1 billion connected internet users over the next 5 years. And we basically didn't really have a startup ecosystem per se in 2010. Today we have a very vibrant startup ecosystem, and in many ways, as I said, right, our view, and we believe this very strongly, is that we are just getting started, right? India is just getting started when it comes to the startup ecosystem, and over the next decade, we are going to. In fact, I had said about 2 years ago that India will have 100 unicorns, $100 billion, private companies by 2025. Because of COVID, maybe that will get pushed out a year or two, but certainly somewhere between 2025 and 2026, 2027, India will have 100 unicorns. But then if you fast forward to 2030, that number is going to more than double from there, right? So we'll have several $100 billion companies, new companies that have been created, and that's very exciting, right? So as investors, especially early stage technology investors, we take a very long-term view, right? We're not really focused on the next 6 months or 12 months or 18 months. That's very important, and we'll talk more about that in a minute. But we really take a 8, 10, 15-year view onto what might happen in a specific market, a specific country, a specific industry, a specific technology platform. And that is really what we are focused on. And as we take sort of an 8, 10-year view of the Indian internet ecosystem and the Indian startup ecosystem, I mean, we're going to see exponential and extraordinary opportunities in many, many different subsegments of the tech ecosystem in India.
Yeah, I think it's wonderful that you are, even as a venture fund, you are taking a truly long view of, say, more than 5 years. Like 10 years and 15 years is something I rarely hear from venture capital firms. So it's wonderful to see that you are taking a very long-term bet, which is contrary to general trends in this industry. So great to see that. And next is that the third search cohort. We saw many Indian startups making the cut. How they have been evolving? Any good success stories or something interesting news you have to share?
No, look. So as I mentioned, we just finished up our third cohort. We have 15 companies in our third cohort, and our cohorts are constructed where about half the companies are from India and half the companies are from Southeast Asia. Our companies are doing very well. We have companies like Fitter, which is in online fitness. So if you're trying to get fit, please do try out Fitter. It's an exceptional product. It's an exceptional service. We have companies like Drink Prime, which is a IoT-based subscription-based water purification service. It's a Bangalore-based company. So if you live in Bangalore, obviously you're not here in Gujarat. But I think it's a very, very interesting company which will go national very, very quickly. We have companies like Conversite and Atlan and many more, right? So I think this is obviously it's still quite early for our third cohort because we just finished up our third cohort. But if you go back to our first cohort, because now it's been about a year and 2 months since it's been exactly a year since our first cohort wrapped up Surge, right? So it's been 12 or 13 months since our first cohort finished Surge. But if you look at a company like a Katabook, I don't know how many of you are familiar with Katabook, but if you're building a software company, you should really take a look at Katabook, right? Katabook essentially today has about 8 million active merchants. They're really leading the way in digitizing India's very small businesses. I think it's an exceptional team, and we have many companies like that in our first cohort, right? And as I said, as Surge, we have invested over $100 million into our first, second, and third cohorts of Surge. But our first and second cohorts, primarily our first cohort, has actually raised over $250 million of capital outside of Surge, right? So this is outside of the Surge capital that they've raised, which at least is an indication that, look, capital raising is not really an indication of success, but it's an indication that companies are making good progress and other investors are willing to actually commit significant amounts of capital to build out these companies. And as many of you know, to actually be able to grow that quickly for a seed stage company is quite special. And it's because of these incredible founding teams that we have, combined with the fact that quite a number of them have found product market fit, which is sort of the most important thing as a seed stage company, is to find product market fit, and we can talk about that in a minute.
Yeah, that's wonderful because the two names you mentioned, Fitter and Katabook, these are two startups I myself have had little bit of experience, and I admire their product and the offering. And even in Katabook, out of curiosity, I tried opening an account and found it very, very onboarding process was very, very smooth. And I just could imagine the kind of empowerment a small business would be getting. The hassle-free account maintenance, receivables maintenance, with just a few clicks on your mobile app is something of a dream come true for a small merchant. Please, I think that's wonderful. You are doing things that could actually empower the small businesses to make good money. I think it's wonderful. Thank you so much for sharing this news with us. And what do Indian startups need to do to become global? Because we have seen this cohort, and you are comparing. Even also within your cohort, you are having 50% Indian and international. So, how do we make our Indian startups go global?
Yeah, I think, look, at the end of the day, the most important thing for a startup is, you have to have a customer in mind, and you have to solve a problem that customer has, right? And look, you can either, focus on a customer segment or a customer that is international, maybe a US, enterprise customer, or you could say it's a small business that's, in the US. And then the other thing you have to say is, what is the real problem that you're trying to solve, right? So I think the most important, I worry less, Mr. Nagarajan, about are you building a global business? Are you building an Indian business? I think as a seed stage company, given the audience that you all have, I think the most important thing is who is the customer and what is the problem that you're trying to solve. And as a seed stage company, the next most important question is, have you built a product that delights that customer? Right? It could be an enterprise product where you're selling a SaaS product to a large customer. It could be a consumer internet app. Maybe it's a gaming app. Maybe it's a fitness app. Maybe it's an education app. Right? You have to really start with that, because I think what a lot of entrepreneurs sometimes get carried away with, sort of building a company and growing fast and raising funding, they lose sight a little bit about fundamental questions of who is the customer, what is the problem you're trying to solve, and have you built a product that delights your customer, right? And by the way, that customer could be and by the way, it can't be a global customer, right? There's no such thing as a global customer. A customer, let's say if it's a business, it's in a certain vertical, it's in a certain country. So for instance, iHubX built for very small businesses in India, right? Very small businesses like Kirana stores in India, right? iHubX didn't start off by saying we're going to build for all small businesses all over the world. So for instance, so what that really means is, if you're trying to build a global business, make sure that and you can be either global from day zero, or you can be global over time, right? Meaning you can actually start in India, get to a pretty significant critical mass in India, and then go global. Or you can say, I'm going to be global from day zero. So Freshworks, for instance, started off with a help desk product where they were starting by focusing small businesses in the US. Again, right? Small businesses in the US didn't have the kind of help desk support software that they wanted. And Girish and his co-founder, coming out of Zoho, felt that they could build a product that would delight those users, right? So they were very clear on who the customer was. They were very clear what the problem was. Then they built a product that delighted their users. So I would say, if you're trying to build a business that is global from day zero, then start by identifying who the customer is and what is the problem that you're trying to solve, and make sure that the problem is real before you start actually building the solution to that problem.
Yeah, I think we are also trying to do the same thing. Like our focus has been on introducing design thinking to our student entrepreneurs, and also our mentors on identity, and also a big focus on business model canvas to actually do an exercise before you jump into any idea that actually fascinates you. Go through the hoops and do a proper evaluation, and at least make a clear informed choice of your focus. I think so. Starting with that point is very, very critical to find your focus. So thanks for sharing that to us. So what do you think is the key strength of Indian startup ecosystem as per you?
Yeah, I think Indian startup ecosystem now has many strengths, right? I think the first is, and by the way, Mr. Nagarajan, I'm going to talk about technology startups, because I do realize in Gujarat you have large number of startups across sectors, right? We were just talking about that in backstage. You have a lot of manufacturing startups, you have a lot of biotech startups, you have medical startups, healthcare startups, pharma startups. I will talk about technology startups because that's what I know, right? I don't know other sectors that you all have startups in. But within the technology sector, the first thing is, as I said, we have 500 million connected internet users who are consuming 16 gigabytes per user per month. Okay, that is a very, very large connected user base, right? Second thing is, thanks to, I think, the terrific work that the government of India has done over the last many years, right? We have um, digital infrastructure in the form of identity and payments that has been fully rolled out, right? Over a billion Indians now have Aadhaar, and UPI, as you know, is the single biggest change that has happened, right, to the digital payments ecosystem. I don't know whether how many of you know this, but if you go back 4 years ago, India did not have a digital payments ecosystem. Today, as we sit in the middle of 2020, India has the most advanced digital payments ecosystem in the world by far. Right? So that's the second thing we have is we have sort of digital payment infrastructure built out that is highly, highly scalable. And that's important because if consumers want to pay, now there's a way to actually pay that. And now with some of the new announcements that UPI have made, I think it gets even more interesting. The third thing is, look, I think thanks over the last, I'd say probably 5 to 7 years, India has built out a lot of the physical infrastructure that complements digital infrastructure, especially around logistics and infrastructure, right? So as you know, Flipkart and Amazon have spent over $10 billion essentially creating an e-commerce market in India today now with 80 million Indians actually buy products online. And a lot of that money has really gone into three things, right? It has gone into building logistics and fulfillment infrastructure where now if you're Amazon or Flipkart, within 3 days, they can pretty much deliver to any pin code anywhere in India. That's pretty remarkable, right? Because if you go back to 2015, 5 years ago, if you wanted to get something to the most remotest part of India, it would have taken you several weeks. Now it happens in 2 or 3 days. And also the other money that they spent was around building awareness that consumers around what e-commerce is, and also giving things like discounts, which are obviously expensive, so that consumers get into the habit of sort of buying things. So basically basically, large connected user base, digital payments infrastructure, offline infrastructure that enables things like e-commerce. Thing is, look, our entrepreneurs are getting much, much better, right? A lot of the young entrepreneurs we are seeing today have actually worked at unicorn companies, right? They worked at Flipkart. Flipkart has created, literally dozens. I think the number might even be more than 100 startups have been founded by Flipkart alumni, right? Entrepreneurs who basically spent their time at Flipkart. Same thing with Freshworks, right? Freshworks already has started creating dozens of SaaS companies that have come out of Freshworks. In Chennai, you can look at a company like an Ola or a Paytm, or you can look at a Google or an Uber or a Facebook. So now we have actually entrepreneurs who are starting companies that in many ways have seen the movie. Right? If you've seen the movie, you've seen Flipkart, like the Udaan founders, right? The Udaan founders pretty much, were part of Flipkart's journey, right? So they knew how to scale a company very, very quickly, right? Mukesh Bansal, who's the founder of CureFit, he built Mitra, sold it to Flipkart, and then was at Flipkart for a long time. And now, so second time around, third time around, you get much, much better at building out those companies. So I'd say that's the fourth thing, which is the quality of Indian entrepreneurs is getting significantly better. And I'd say the last one is, look, basically, the funding ecosystem has evolved dramatically, right? As I said, if you go back to 2010, India had less than $1 billion, less than $1 billion of venture capital funding. In 2019, we had $14.5 billion of venture capital funding. So, we've come a very, very long way in terms of funding. So if you put all of those things together, all of a sudden you have all the underlying ingredients of being able to build a startup very quickly.
Yeah, I think some of these facts you have told is truly amazing. The UPA has transformed the entire digital culture of this country, from the common man to the well-to-do people. I think that's wonderful. And also about this funding thing, we always used to think whether there could be more Silicon Valleys of in India and all that. By the thing you're saying, I think cities like Ahmedabad, Surat, Rajkot, and all, they also have their own small active investing community, which iHub is also trying to capitalize them into a venture capital sort of framework. So we are also working in creating that part of the ecosystem where it actually pulls the startup towards that funding part of it. So I think that's the interesting thing that's happening. So we'll have a lot of small networks that are into active investment. So what, according to you, should be the near-term priority for startups in this pandemic, because it has already been played out a little bit more than longer than expected? So what should be the priority of these startups to overcome?
Look, I think the near-term priority for a lot of startups, right, survival. It has been a very, very difficult 4 months, right? I mean, most startups didn't have any revenue for full 2 months, and even and depending on the sector that you're in, your revenue may have come back to pre-COVID levels. But for most startups, it's between 30 and 70% of pre-COVID levels. And as you know, I mean, you're seeing this in Gujarat as well. A lot of cities are going to start and stop and shut down and open up and so on and so forth, because we still have a long way to go before we have COVID vaccinations of 1.4 billion people in India. And as a result, look, I think what's really most important thing is you have to survive, right? And to survive as a startup, you need to have cash runways. So in March, even before India shut down, as Sequoia, we started talking to our portfolio company founders saying, look, you need to start now preparing to make sure that you have 2 years of runway, right? So this was in March, which was 4 months ago. And we would still say today that, you should have enough cash runway to be able to see your company through the end of 2021, right? So which is about, let's call it 18 months away. So I would say, survival is the priority. Survival requires cash, because if you're a startup, you may or may not be breaking even yet. But but once you actually have enough runway to be able to survive, let's say, and be around, right? Meaning you're not worried about going out of business. Then I think you should really focus on reimagining your business, right? Really thinking about how do you make your product much stronger? How do you think about new customer segments you can go after? How do you think about reimagining your go-to-market channels? And because it's a great time to be building, right? So we actually think that, obviously it's a very difficult time in the world. It's difficult for humanity. It's difficult for countries. It's difficult for businesses. As you said, Mr. Nagarajan, it's especially difficult for startups. But it is also a great time to be building, right? Because there are no distractions. You can build. It's the time to build, as we tell entrepreneurs now.
Yeah. In fact, during the most initial days of the pandemic, we had a question, and the summary turned out that if you can build customers, build it. If you can make sales, do it. If you can do both, try for that. So that was a formula that emerged out of a lot of discussion, that do something, but don't just even if you need to pivot. And we had a lot of even student startups pivoting suddenly into deliveries, vegetable deliveries and all that. They truly tried to be entrepreneurial, and we had good inspiring examples in that. So from being a part-time angel to a full-time professional at a VC firm, what are the key learnings from your involvement from Indian startup ecosystem?
I mean, look, there are a lot of learning, but as I said, I think if you're an entrepreneur, obviously as an angel investor, I invested in a very large number of companies. I've been at Sequoia now for exactly a year, so I've obviously seen a large number of companies. And at Surge, we've been fortunate to partner with several dozen companies already. I think as an early stage founder, as you said, Mr. Nagarajan, if you're a pre-seed founder, number one, make sure you are pursuing this idea that you're pursuing in the right reason. Why are you pursuing your idea? If you're pursuing it just to get credits in school, that's fine. By the way, that's interesting because you learn about how to build a company, but you're not going to end up building a company, right? I think the second thing is, make sure, again, as I said, you really understand who the customer is, what's the problem you're solving. And the third thing is, once you launch fast, iterate, especially if you're in a technology or a technology-enabled business, really focus on finding product market fit. Because I find that, a lot of companies launch, but they don't ever find product market fit, right? And sometimes you raise a lot of money, you still don't have product market fit. And until you find product market fit, you are not going to be able to build a company, right? Because once you find product market fit, then you drive growth. Eventually, you start monetizing. You have unit economics, and then you start building a business, and it becomes cash flow generative. So that's the cycle of how you go from idea to company. But that first big milestone that you have to hit is really called finding product market fit. For all the entrepreneurs, who are in Gujarat, who work with iHub and otherwise, I would say that is the thing that all of you need to focus on as a seed stage company. And as an angel investor, Mr. Nagarajan, I was investing in, very early, right? Long before product market fit. Two founders, an idea, maybe they had an idea, they launched, they had a little bit of traction. And what I found was companies that really focus, like maniacally, obsessively on finding product market fit. Those are the companies that started really growing after that, as opposed to the companies that try to grow fast and then try to grow, but without product market fit. Generally what happened was they just ran out of money, right? And some of them obviously raised their next round of financing, but they were still not able to build sort of an enduring company.
Yeah, I think when you finding product market fit is one of the key challenges that every startup will face, and doing a lot of experiments. So in that sense, how should startups can create an Indian centric business model?
Yeah, look, I mean, they, at the end of the day, it's not whether it's a India-centric business model or a US-centric business model, or a, Chinese-centric business model, right? At the end of the day, you have a customer, there is a problem that you have for this customer, and you build a product or a solution or a service that solves that customer's problem, right? And then the business model is, in many ways, how do you actually monetize that product or service that you've launched, right? So Katabook started off with this problem that, they noticed that a lot of very small businesses like Kirana stores were doing all their accounting on paper and pen, and they couldn't keep track of sort of all the credit that they were giving to customers. And they said, look, this is a problem we can solve with software. So they built this super interesting product. They launched it on the Play Store, and then boom, before they knew it, they had 1 million merchants using the product, right? So and then and then they started growing very, very fast. Eventually, they'll have a business model that'll entail several different aspects of how they're going to make revenue. Whereas if you're building an enterprise software company, like let's say Dhruva, which is in our Sequoia portfolio, Dhruva is a pretty straightforward enterprise software company, right? It's a SaaS company where large companies pay to actually use their software. They pay it on a subscription basis because it's a SaaS company. And then if you're an e-commerce company, your business model is, you sell product and you actually make a commission from your merchant on selling products. But to me, the business model comes long after you first answer these specific questions, which is, who's the customer, what problem am I trying to solve, and can I build a product or a service that my customers love? So I'd focus less on trying to do something truly Indian, but I'd focus more on solving a real customer's problem. I'm sorry, Mr. Nagarajan, I keep coming back to the same thing, because as a startup, that is what matters, right? Do you know who your customer is? Do you know what problem you're solving?
Yeah, I think that's a fundamental point. We also want to drive home to the mind of every entrepreneur who is listening to this, and probably he will be listening to this video after some time. It will be in our archive, it will be on our Facebook page. So all the 3,500 startups that we have funded so far, and many more to come, we also want to drive the same point: find your product market fit, and also think about who is your customer and what problem you are trying to solve. I think with this, I would like to request Hiranmay to start with these questions. I am almost done.
Thank you so much, sir. I am just picking some questions from the audience. Sir, you rightly mentioned these two important stages. In the initial stage, the startups are busy in creating a business model, the product market fit, and then go for a business model validation. Suppose these two phases are taken care of. What are the strategies that you advise for a scale-up plan? Because there are certain companies that we see who have done a decent amount of market validation, particularly the first stages of product market fit, and now they want to scale up. So what are the factors that really matters for the startups post product market fit to scale up in their value chain?
Yeah, so look, it depends on the kind of company it is, right? And I'll pick one kind of company. So let's say you're a software company, SaaS company focused on enterprises, right? So scaling up really is all about sales and go-to-market, right? We believe that your first $500,000 or $1 million, let's say 3 to 4 crores of revenue, or even 7 to 8 crores of revenue, should be what we call founder-led sales, right? So what that means is as a co-founder, as a founder, or as co-founders, really you need to be leading those sales, because in the early days of being able to grow revenue, there's nobody else in the world who's better than you as a founder of articulating the value proposition of your product, right? The other thing that we find in the very early days, as you go from, let's say, zero revenue to 50K to 100K to, I'm talking about thousands of $100,000 of revenue, or call it 70 lakhs of revenue, you get a lot of feedback from customers, right? Look, hey, can you do this, can you do that, what features can you change, etc. Only a founder really will be able to take a lot of that insight and then figure out what do they want to build into the product and what do they not build into the product, right? So that's if you're a enterprise software company. On the other hand, if you're, let's say, an e-commerce company, right? E-commerce company scaling really is about consumer acquisition, right? So what's that about? That's about trying to find ways to grow your user base, right? Through organic channels as well as digital marketing channels. And a lot of it there has to do with expertise, right? Do you have very strong digital marketing expertise on your team? If not, you probably need to hire somebody, not probably, you do need to hire somebody onto your team that deeply understands digital marketing. Do you understand organic growth? If you don't understand organic growth, You probably need to get people on your team that actually need to understand organic growth. So that's, if you're an e-commerce company, right? If you're an e-commerce company, you probably need to figure out how to significantly increase your merchandise selection, right? You probably need to increase, you need to probably work on your purchasing because you need to get better pricing for the products that you're going to sell. So Hiranmay, I don't think it's one answer, but it really depends on the business and what does scaling really require in that business. But at the end of the day, it all comes back to talent, right? Do you have the right people on your team that are going to be able to take you, let's say, from where you are to $1 million of revenue, right? And what a lot of software as a service founders do, which actually is not correct, is very early in the game they try to go hire salespeople without doing founder-led sales, because for technical founders, right, sometimes it's very difficult to do. They don't feel comfortable trying, going out and selling. But the problem is, if you're not going out and, if you're not comfortable going out and selling, then it's very difficult to build a sort of an enterprise-focused software company. So it's very, very company-specific, and it's very industry-specific, right, in terms of the scale-up phase.
I think you beautifully summed it up. If the first $1 million, if the founder is not involved in the sales, probably many often, as you rightly mentioned, many times the tech founders are the backbone of the company, but then they need to also go and sell out in the initial days because the value proposition better. I think this is a wonderful mantra that you gave to all of the startups that listening to you, that in the initial phase, they should not outsource their sales thing to others and just keep building the product. I think that's a very powerful learning from you. Rajan, you have been a very, very avid investors in the angel stage, and predominantly in service sectors. You have done a very fabulous investment. What have been your strategy or to pick the companies that you invested at, and what have been your key insights out of the investment that you have done?
Yeah, so first of all, Hiranmay, I actually have never invested in services companies. All my investments have either been in software products or consumer internet, right? I've done a few others like life sciences, but very, very, very rare, right? So half my portfolio was B2B software product companies, and the other half has been really various forms of consumer internet companies, right? EdTech, content, e-commerce, health tech, and so on and so forth. So I think, look, we've talked about the learnings, right? At the end of the day, as an angel investor, you're really making founder bets. You're trying to invest in founding teams that you think are going to be exceptional at building a company and going after, pretty large markets, right? And I think on founder bets, for those, young entrepreneurs who are, watching this or going to be watching this, investors sort of ask this question called founder market fit, right? And what that really means is, the simplest way to think about it is, why does this founding team have a right to win in this market, right? And I think obviously if you're in university, that's a little harder to demonstrate of having worked in certain industries or worked in certain set of companies. But that is a question that investors are going to ask, right? Now, obviously, if you're a student entrepreneur in university, what you have to do then is to really demonstrate that you deeply understand the problem. Right? You spend a lot of time talking to hundreds of customers, if not thousands of customers, trying to understand the problem, right? You spend a year or many months trying to really go deep into the specific sector where you're trying to build a solution, and you so deeply understand the problem. Having a very tertiary view of the problem is usually a bad sign, right? So that's the first thing, in terms of the team, founder market. Then we look at a couple of other things, right? In terms of resilience, the team that will be able to attract other team members, is the team that be able to raise capital, all those kinds of things. And then we look at the market to say, is the market large enough where you can build a very large company, right? So that's a market sizing question. So you hear about things called TAM, total addressable market, SAM, and so on and so forth. But essentially, how big is the market, and being able to quantify that market to demonstrate that the market that you're going after is large enough to be able to build a big business.
Wonderful. I think these are very, very key insights. Because we come across some of the startups who have been dealing with different investors, and we must say that as it is important for a startup to look for a right investor, it's also very important that the investor also pick up the right people. And you rightly mentioned, coined it rather, that the startup market fit. We have been talking about product market fit, but then it has to be startup market fit also. Sir, particularly, these days we hear this term unit economics quite a lot. This is very important for any startups to survive and grow, particularly in the context like COVID and other situations. how do you see our Indian startup making their unit economics right, and what is your advice to them?
Yeah, look, I mean, at the end of the day, you have to improve your unit economics, right? If you don't improve your unit economics, you won't be in business. So first, we keep that in mind, right? Because in 2020, investors were willing to invest in companies that were growing, sometimes with not so good unit economics. Today, there's a big focus on unit economics. If your unit economics are not positive or they're not interesting, right? You can't see a trend line that's going, then investors aren't going to be as interested. But what I must say, Hiranmay, is I've been incredibly impressed at how quickly Indian entrepreneurs have adapted, right? So, for instance, I don't know how many of you know of a company called InstaMojo. I'm an angel investor in InstaMojo. It's not a Sequoia company, but InstaMojo was at about negative 40% EBITDA, right? Earnings before interest, depreciation, and taxes 4 months ago. Last month of July, they were at 28% positive EBITDA. Same company, minus 40 to positive 28. And this is a company with many millions of dollars of revenue, right? So it's a startup, but but think about that kind of trajectory, right? And by the way, InstaMojo is not by itself. We are seeing many companies that have been able to significantly improve their profitability, right? And now, obviously, if you don't have a lot of revenue, the first step is make sure you right size your cost structure. Right? You have to right size your cost structure. Like, for instance, a lot of companies are now working from home, right? So especially if it's a company where you're paying a lot of if you're paying for rent and things like that, and you only have 10, 20 people, I don't know how many team members most of your companies have, Hiranmay and Mr. Nagarajan, but you don't really need to pay for office space, right? Then you renegotiate every single contract that you have, right? Whether it's the software contracts, the cloud payments, the vendor contracts, you negotiate all of those things. Then you kind of really look at your team and say, do I really need this many people, given what has happened in the market and given the stage of my company, right? You look at your marketing spends and say, do I really want to be spending this much? So you've got to really do sort of what I call a zero-based costing for every single cost line item that you have. So that's the first part of what you have to do, right? Second part of what you have to do is you have to very quickly say, right, where else can I figure out how to make revenue, right? And that is where I think Indian entrepreneurs have also got very, very creative, right? Where they've come up with lots of interesting ways in which they can start making maybe either more revenue or different kinds of revenue. So those kinds of things. And third, look, if you've got products, for instance, where your contribution margin negative, especially if your gross margins are low and your contribution margins are negative, maybe you don't need those right now. Because with products where your contribution margin is negative, Hiranmay, the faster you grow, the more money you lose. Right? So the fastest way to run out of money is to actually grow a business that is unprofitable. Right? Because the faster you grow, the more money you lose. So those are sorts of the things that you have to do. But at the end of the day, look, it can be done. We are many examples now in the Indian startup ecosystem of companies that have gone from being unprofitable to either being very, very profitable, or they've gone from having really quite poor unit economics to having very strong unit economics. And even if you're not profitable, as long as you have a path to profitability, right? I think your stakeholders, be they investors, board members, others, would actually be quite encouraged by the progress that you're making.
Wonderful. I think it's a very powerful insight for every of us to pick from this conversation. Sir, you rightly mentioned that predicting the future is really tough down the line 5-6 years, looking at the kind of growth our ecosystem is seeing. You said that there might be 100 unicorns in place. 2020 to 2030, how do you see Indian ecosystem going ahead?
Yeah, I mean, look, 20 to 20, I've already told you, right? By 2025, I think there's a very high likelihood India will have 1 billion connected users, 1 billion internet users. Okay, that's a really large internet user base, right? We'll have over 100, unicorns, which is $100 billion companies. Today we have 40,000 startups. I do think quite a number of startups will not make it through COVID, but we will have new startups that will come up to actually net new companies. So we'll have tens of thousands of startups and much more vibrant. We'll probably have much more venture capital that we had in 2019. 2019. India at $14.5 billion. There's no reason that number won't double over the next 5, 6, 7 years. So look, again, as I said, Hiranmay, we have come a really long way, right? Especially if you're like me, or maybe the two of you, if you've seen the Indian ecosystem evolve over the last decade, 2010 to 2020, you look at it and say, oh my God, how far we have come. But again, right, what we have seen is the trailer. It's not the movie. the movie is going to start soon, right? And the movie is the next 10 years. So I think it's very, very exciting if you're a student entrepreneur, because there's never been a better time to be launching a company. There's never been a better time to actually build a company.
Wonderful. I think, you make us more optimistic. And when we see this thing happening, and you rightly mentioned the people coming out of the startups, alumni of this existing startups are creating also fabulous companies. And I think that's going to be bringing more cascading impact. I mean, this has happened globally. And now I think the trigger is also happening at Indian context. Many people who have worked in Flipkart and others have now come out and built good companies. So I think that's going to be very, very important. Sir, you have been a part of large corporations globally like Google and others. So how hunger our large corporations are to leverage these startups to closely work with and try to co-create certain things?
Yeah, look, I think Indian corporates are getting much more open to working with startups, right? So I'll tell you, I was an early angel investor in this company called Dhruva. Sequoia is actually lead investor in the company. It's done well. It's a unicorn. It's a cross-border SaaS company, right? But when Dhruva was launched in 2009, Dhruva didn't make a single paisa of revenue from India, right? But then today, if you look at SaaS companies that are launching in India, in fact, in our next cohort, we have several SaaS companies where their primary revenue base comes from Indian companies, right? So I think we've come a long way in terms of Indian corporates being very open to, whether it's a HDFC Bank or an ICICI Bank or an Axis Bank or a Reliance Jio or an Airtel or a Unilever or a Marico, or our large companies, I think, are much more open today to be able to work to be working with startups. That being said, I think a lot more can happen. So in fact, maybe one of the things that you all can do in Gujarat is make sure that the top 2,000 Gujarati companies are all committing to actually work with startups, buy software from startups, because that really is an accelerator, right? Because it really helps startups get up and running. Because as I said, especially if you're building a B2B product, the first big thing you're trying to do is first you identify a customer, second you identify a problem. But once you build the product, you have to go sell it to a customer, right? And if your customers are, let's say, all in Ahmedabad or all in the state of Gujarat, very quickly you can actually jumpstart your company. So actually, I just thought of it as we're speaking. That would be a great mandate after we get through COVID, because I know in COVID, everybody has a set of priorities around taking care of employee safety and so on. But it'd be great to have the top 2,000 companies in Gujarat commit to working with startups, both from the state and from across India, because I think that'll really help you catalyze your ecosystem.
Wonderful, sir. I think you rightly mentioned, and just before a quarter, we designed a program called Startup Square, in which we are looking to engage our early stage startup companies with the progressive industries in Gujarat and outside. And we strongly believe that there is a huge value which can be created at the intersection of the large corporation and the startup companies. So you rightly picked up your answer to my next question, and this could be a suggestion from your side, maybe to all of us in the government, that what are the things that you feel we should do right if Gujarat want to build a progressive ecosystem in next decade? You rightly mentioned about co-creation with industry, but do you pick up some other points which you should take care of as a policy measures?
Yeah, look, I think the most important thing is talent. I think it's very exciting that iHub has created several thousand startup student entrepreneurs, right? I think from the technology sector, now it's very sector specific, right? But at least from the technology sector, what you really need is very high quality engineers, right? So in backstage, Hiranmay, you and I were talking about this, but I think Gujarat should set a goal to create 10,000 Google quality engineers over the next 2 years, right? And the way, by the way, you can do it is, you probably already have good computer science programs, but your computer science programs may not be creating very practical, job-ready Google quality engineers, right? So I think what you might want to think about is, there's a company called Scalar Academy that is in our first cohort of search. In fact, they've started talking to a few states now. Partner with the companies like Scalar Academy, there are others, right? To really, go after and create a large pool of highly talented, software developing talent, right? So because at least what I find, it may be different in Gujarat. A lot of computer science graduates who graduate from Indian universities are not really good at building products, right? So what India needs is builders, coders who can actually go out and start coding. So I would say that's the first thing, right? And I think I'd love for you all to take up this challenge of 10,000 Google quality engineers over the next 2 years. The other thing is, start a startup school. So, I lead, apart from Sequoia, I lead TIE in Delhi, right? The Indus Entrepreneurs, the Delhi NCR chapter. And we are going to launch a startup school. And the intent, Hiranmay and Dr. Nagarajan, is to take early stage entrepreneurs and really train them on all the different and important aspects of building a company, right? So I'm not talking about people who want to start. I'm talking about people who've already started to actually help them accelerate their growth, right? All the things we're talking about. If you don't have product market fit, how do you find product market fit? How do you make sure you're hiring the right people? How do you make sure you're building the right company culture? How do you hire salespeople? How do you hire marketing people? How do you think about growth marketing? All these kinds of things. So, by the way, if you all are interested as a state, we'd love to talk to you guys about it too. So TIE is launching TIE Delhi NCR. We are going to launch a startup school, and we are quite excited about this. So because that's important, right? Because you need to, and I think it's great what you're doing with iHub, but you need to continuously, especially take the serious entrepreneurs, right? The founders who really want to be entrepreneurs and actually do that. I think the last thing is maybe you should think a little bit about is how do you create more capital? So it's very exciting to hear that you provide, whether it's 2 or 3 or 4 or 5 lakhs, but can you set aside 1,000 crores from the government of Gujarat to invest in Gujarati startups, right? And because that would make a huge difference, right? Because raising capital, I don't know, I haven't spent a lot of time with Gujarati startups, but in many startups, outside of, let's say, Bangalore and NCR, it's quite difficult to raise capital, especially if you want to raise more than 5-10 lakhs. It's quite tough, right? So you can jumpstart it by creating, 1,000 crores, look, is not a lot of money, right? And creating a pool of capital that makes the entrepreneur's journey much easier. So those are some ideas. Hopefully you'll be able to, I'm sure you all have thought about some of these ideas before, but 3 or 4 of these things, I think, can make a huge difference in Gujarat.
Absolutely, sir. I think all the 4 ideas are wonderful. We are into first 2 of them are on pipeline for execution, and next 2 you rightly mentioned about pulling in 1,000 crore capital to invest in these startups. I think it's a brilliant idea. I will certainly look on this. I think, sir, it was wonderful talking to you, and a lot of these ideas will translate into action. We have Nagarajan sirs and other bureaucrats from the government who are very closely involved in building these ecosystems, both in terms of investing their personal time and then also bringing in public policy aligned to the startup ecosystem. So I would now like to request Nagarajan ji to offer a formal word of thanks to this wonderful conversation that we had with Rajan.
Yeah, I think that was a very short 1 hour we had. The kind of conversation that was happening. I thought it's just in a 20-30 minutes, and we are already 1 hour into this program. So I think on behalf of all the students, startups, and also the mentors, and also on behalf of Education Department, Government of Gujarat, I extend a very warm thanks to Shri Rajan Anandan for his wonderful ideas, the enthusiasm and passion, and also for his insights into from his experience, wealth of experience in the startup and funding space, and also some of the interesting ideas he has thrown. We also agree, and we will surely look at opportunities, especially creating the talent is something we are also working on, because it's like a sort of chicken and egg story. What comes first? The startups come first, or the talent comes first? So I think we should break that cycle and get it started. And there's been a very great conversation. Thank you so much for joining us, and thanks for sparing and spending time with us. And
great, thanks everyone for joining. Nagarajan, thank you, Hiranmay.